All right, today we're going to crack open the secrets of, honestly, one of the most important investing books ever written. And listen, this isn't about hype, it's not about hot tips. This is the real deal. The timeless strategy that literally built the fortunes of legends.
I mean, just think about it for a second. Almost all the financial news, all that chatter you hear, the anxiety, it all boils down to one single question, right? What's the market going to do next? We're all trying to play this prediction game. And you know what? It's a game that most people, well, they lose.
But what if you didn't have to predict at all? I mean, seriously, the legendary investor Benjamin Graham, he came along with this, well, pretty radical idea. He basically said, forget guessing the future. The real goal isn't to be a fortune teller, it's to build a financial fortress so strong that you can handle any future that comes your way. See, the whole focus just shifts from forecasting to preparation.
And hey, if you need proof that this whole philosophy actually works, you don't have to look far. I mean, Warren Buffett himself has called The Intelligent Investor the best book on investing ever written. This isn't just some book he read. It's the intellectual DNA he used to build his entire fortune.
Okay, so how do you actually do this? Well, this is where Graham's genius really shines. He was a master at using simple stories, these little mental models, to explain really complex ideas. So let's start with the most important one of all. It's time for you to meet your new, imaginary business partner.
So picture this. You own a piece of a business, right? And you've got this partner. Let's call him Mr. Market. Now, every single day, without fail, he shows up and he makes you an offer. He'll either buy your shares from you or he'll sell you his. But here's the catch. Your partner has a bit of a problem. He's, let's just say he's really, really emotionally unstable. Some days he's just euphoric, totally on top of the world. He thinks everything is amazing, and he's willing to buy your shares for a ridiculously high price, way more than they're actually worth. But then, on other days, oh boy, he's deeply depressed. He's convinced the sky is falling, the world is ending, and he'll offer to sell you his shares for an absolute bargain basement price.
And this right here is the absolute core of the whole strategy. Get this, you don't have to take any of his offers, not a single one. You can just completely ignore him. You're the one in control, not your crazy partner. You don't have to do a thing just because he's having a manic episode or a panic attack.
You see how this just completely reframes the whole idea of market volatility? For most people, volatility is risk. It's scary, right? But for the intelligent investor, it's just Mr. Market's daily mood swings. And those mood swings, well, they create opportunity. It's your chance to buy low when he's depressed, and maybe, just maybe, sell high when he's feeling euphoric.
Okay, so if we're supposed to ignore Mr. Market and his crazy moods, what do we listen to? Well, this is where Graham gives us a super clear framework. It's all based on 5 core principles designed to keep you safe.
First up, you've got to know that the price Mr. Market is screaming at you is not the same thing as what the business is actually worth. 2 totally different things. Second, you always demand a margin of safety. That just means you buy at a price that's way below its real value. That's your cushion. Third, your main goal isn't hitting home runs. It's just not striking out. You want to avoid big, stupid losses. Fourth, you have to be the rational one when everyone else is freaking out. And last but not least, number 5, remember, you're buying a piece of a real business, not just some lottery ticket with a ticker symbol that jumps around all day.
All right, now that we have the rules of the game, Graham asks you to do something kind of tough. Be really honest with yourself. See, he knew that not everyone is built the same way. We don't all have the same amount of time or skill or emotional control. So he splits intelligent investors into 2 different camps.
On one side, you have the defensive investor. Their whole game is about keeping it simple. They focus on diversification, being super patient, maybe using automation, anything to avoid making huge mistakes. Then, on the other side, you've got the enterprising investor. This is the person who's willing to roll up their sleeves and do the heavy research to hunt down those special opportunities, all in the hope of getting above-average returns.
And here's where Graham drops a huge, and I mean huge, piece of wisdom. Look, the idea of being that active, enterprising investor, it's exciting, right? It's the cool thing you see in the movies. But the reality? It takes a massive amount of work and an ironclad emotional stomach that, frankly, most people just don't have. So here's the key takeaway. Choosing to be a defensive investor isn't settling. For most of us, it's actually the smartest possible move.
So this is the part where you've got to ask yourself, which one am I? Do I really have the time, the knowledge, and this is the big one, the emotional stability to be an enterprising investor? Or is my best shot at winning this game to play a smart, simple, disciplined, defensive strategy? You really have to be honest here.
Okay, we've talked about mental models like Mr. Market, we've gone through the rules of the road, but Graham's single most profound insight, the one idea that really ties this whole thing together, it's about where the real risk in investing actually comes from.
So after he lays out all the math, all the analysis, all the strategies, he kind of pulls back the curtain and reveals that none of it, is the most important piece of the puzzle. The real fight, the real challenge, it isn't out there in the market. There it is. He says the investor's chief problem, and even his worst enemy, is likely to be himself. Think about that. Your toughest opponent isn't a market crash. It's not a bad economy. It's not some slick trader on Wall Street. Nope. It's the person staring back at you in the mirror. It's your own greed, your own fear, your own impatience.
I mean, this is really the ultimate lesson of the entire book. Having a higher IQ doesn't mean you'll get better results. Building a fancier spreadsheet won't give you an edge. The only real lasting advantage you can ever have in this game is mastering your own emotions. It's about staying disciplined when everyone else around you is completely losing their minds.
So let's just boil this all down to 3 simple ideas to hold on to. 3 anchors. First, markets are going to swing. They always have. They always will. That's a fact. Second, your anchor in that storm isn't a prediction. It's your solid understanding of a business's real underlying value. And third, it's discipline. Patiently applying that discipline day in and day out over years. That's what compounds and builds real wealth.
And that leaves us with one final, big question for you. You now have the playbook from one of the greatest investors in history. But, knowing the path and actually walking the path, they're 2 very, very different things. The real work, it starts right now. So the question is, can you take this framework and master the one variable that truly matters? Yourself.